What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic. Today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow. We got CPI, then we got FOMC. We got a big week. Market's going to have a lot of movement. So pretty excited to see where price is going to go. Are we going to get the breakdown back down to 226 and below? Are we going to gap above this trend line of resistance and then run for upper buy side liquidity, maybe 250, 285, maybe up even higher into this fair value gap that we got in the 255, 256 area? Got another fair value gap, bearish fair value gap around 259, 260. Ultimately, we got a big order block here that goes all the way up to 269. Could trade all the way up into that and then still see price come back down. But we have this resistance line that has been offering a lot of resistance over the last week as we've continued to trade up and down in this range and been bound waiting for the CPI and the FOMC news and data to come out. We are starting to set up, we've been setting up this kind of head and shoulders look we've been talking about. We also have, let's turn off the magnet. We also have this Fibonacci retracement that we've been watching and we still haven't broke out of, so it's still in play. It's our optimal trade entry where we've come down. We've traded back up into it twice, exactly to the optimal trade entry, 70.5% fib. We've continued to trade up into that golden pocket last Friday. Now we've sold down a little bit today and had a little bit of a rebound into the middle of the day. Monday's typically accumulation day, and so we often see a wick here on Monday as we either trade up or trade down and then come back down somewhere around like the equilibrium of the day. Let's see if we measured that out, what that would look like. So you can see we closed just right below the 50% level. So that would be, in line with an accumulation day. But really a lot's going to depend on CPI and the FOMC meeting. Other things we got going on the daily chart. Again, we got this trend line of resistance. Let's go ahead and draw a trend support line so that we can see what that might look like. You can see if we connect the lows, we've already broken down below that. If we adjust that slightly to include only this low and this low, we've also broken that. Maybe if we just look at that low, right, or today's wick, you could say that would work as well. But if you do look at this low here and this trend we had going with this candle wick and we extended it through, we've started to break down from that pattern. Now, we could say that there's other lines in play, but that support level is given. We traded down and back up into it. Now we've traded down from it. That triangle is out of play. We would have to be looking at potentially a different triangle. We could also just connect kind of the bottoms here and say that there's just a really tight wedge going on between this resistance line and this as we continue to consolidate, waiting for the CPI and the FOMC event to happen. So to the upside, we have buy side liquidity, buy side liquidity, buy side liquidity. What are those levels that we're looking to break? 245.41 and hold, 246.78 and hold above. Ultimately, then we'd run up to 252.85 if we closed above there. Again, we got buy side liquidity in this wick at 257.21. We have a fair value gap that hasn't closed, another fair value gap that hasn't closed. These are bearish fair value gaps. And then again, we got this order block starting at 257.78 all the way up to 269. So that's where we're going if we're heading up and ultimately heading higher if we break out. Now we could, if CPI comes out good, we could gap this resistance that has been, very sticky. That is definitely on the table. Just because we traded down today doesn't mean that we don't open up, gap open, take out that resistance line that's been such a pest, and then trade up into this liquidity as we head into FOMC. FOMC could be a driver that slaps us back down, or it could continue the rally up into this order block, and that's what we'd be looking for if we continue to head higher. But we have our liquidity targets. We have today's high, and then we have the previous day's high, the equal highs here, then the wick high from back on November 29th. Now, if we start trading down, we've already seen this resistance line offer so much resistance. If we start trading down, we could gap today's low. we could trade down to the liquidity level at 233.38. If we close below that, then we're ultimately targeting, we could say the range low here at 231.32, but really I want to see to the downside 230 be taken and hold, and then we're targeting 226, 226.50, and then we're targeting these fair value gaps here all the way down to 215.40. Ultimately, we got an order block here, a bullish order block at 221 down to 206. So if we started heading down and it looked like we were making a deeper correction, we're at least going to head down into these fair value gaps and maybe even all the way down into this order block. You can see there's overlap between the fair value gap and the order block. That'd be a really likely target somewhere in this 215 range if we got down there. This yellow block here is a breaker block. So when we trade it up and then we traded back through it, it becomes a breaker block. And typically, if we're going to head lower, we're going to come down, test it, probably overshoot it by a little bit, and that's where we could find some support and continue to rally from there. But it has, you can see it has acted as also a mitigation where price traded down exactly to the high of that breaker block and it stopped and we rallied up from there. If we come back down, it's probably not going to offer the same level of support because it's already mitigated price here. We're going to take it out and probably head somewhere into this range of, again, that 215 up to like 220, 221. Now, further below that, which I don't think we're heading for, but we could be 197.87. Sell side liquidity. Well, we already said this order block here. Sell side liquidity here. Sell side liquidity here. 194, 195, and then deeper we have, this falling megaphone pattern, which I don't think will hold. I think that it would be a big tall order to get all the way down to this 160 to 152. But CPI, FOMC could be the driver. You never know. I don't think we're going to see anything like that until possibly a Fed pivot when they decide to start lowering rates. Now, also, if you were to take this low here and this here, we have a little bit more realistic kind of continued falling wedge pattern where, again, I could see us coming back down eventually, depending on how the state of the economy goes, as the Fed pivots and we start to see the market potentially crash, heading into a deeper recession, could see us come back down and test that, that trend line of support and see if it holds. I'm going to take it off my chart for now. Not that important because we're not anywhere close. Really just interested to see, do we gap this resistance and head higher to take out some of the buy side liquidity, or do we maybe gap today's low and head down further into sell side? If we look at the 4-hour chart, on the 4-hour chart, we can see a pattern that did, a triangle pattern here that we kind of traded sideways and back into. But that's just another wedge pattern. So we're either going to see a breakout or a breakdown to confirm that pattern right there. You can also see on this time frame, you can have a better look at this optimal trade entry that we've continued to trade up to and sell off from that point. So, again, on the daily chart, that optimal trade entry zone is a great short entry. Just like if you're playing, we're about to be done with this range for sure. But if you were playing the range, you'd be looking at this support level 233 down to 230, buying in that area, again, riding it up to the 245, 246 range. Now, I think we might have seen our market maker reversal here. Where we're going to get a sell-off. But we will see tomorrow. Again, the market's going to be driven by CPI and FOMC. If we take that out and we take this high, that optimal trade is obviously off the board. But it's still not off the board for us to go lower. And I'll show you what I mean. So sometimes if the eventual move is lower, we see this move, right? And we come back down and then we see our stops get stolen, from up here and up here. We see a run on the stops, maybe even all the way up into this order block, and then a bigger sell-off, right? That's totally normal to see something like that. I would like to see this optimal trade entry hold and then us get a sell-off. That would be a really nice confirmation, and then at that point we'd be, again, breaking 226. So if this optimal trade entry holds, right, came up here, we'd be looking for a bigger sell-off that would break this, come back up, and then potentially head back down. And that retest could be of this 4-hour resistance line here, something like that. But it would be looking for us to break this low, come back up. There'd probably be some kind of 4-hour or daily fair value gap in there that we would trade back into, and then continue to sell lower, maybe into this 4-hour order block again. This one's at 205 up to 210. So we're looking at that 205, 210, 215 range if we drop down. Now, again, let's look at, our 4-hour targets. We got a nice big swing order block here, and we also have another order block here. So let's look if we were to head higher, right? Say we gap that resistance line we were talking about and maybe back test or not. We'd be maybe looking for us to head up into that 220 or that 260, 265 range. Again, we got a 4-hour bearish fair value gap here as well, but ultimately we got that order block. So we might even fail to deliver on that. Maybe, come up, come back down, didn't quite get into the order block. We recycle, and then we come into that order block on the 4-hour time frame. Pretty typical to see price fail to deliver on the first time and then swing back around and grab it later. A lot of times we'll actually see it go right up to the beginning of the order block, reject, and then eventually come back and take that order block, potentially even taking just a little bit higher, setting a new high here. That'd be very bullish if that happened, but we will be watching that. It's certainly possible. If the Fed comes out dovish and the CPI report is good and the market likes what it's seeing, we could see the next leg of a rally. Indexes are already starting to push up. SPY went over 260 today, which is a nice bullish look. But, is it just a manipulation? Is it just a fake out heading into CPI and FOMC, trying to bait as many bulls as possible? That's entirely possible scenario. But it could also be that, they've just been gathering liquidity as it traded sideways, just like what we're doing here. And it could be, the manipulation could be that every time we drop it, that smart money is accumulating their positions down here and not up here. So we'll have to see. But we also have what, appears to be the makings of, like a complex head and shoulder look. We'll just call it a head and shoulder, but, we got something like that coming up, and then we'd be looking to, potentially come back down, something like that. So if you were to play classic head and shoulders on this move, you'd be looking at the head down to the neckline, and then you'd be extending from the breakout point of the neckline down below. That would put us into this fair value gap here, right? And if we did head down there, we might head a little bit lower to take out that 4-hour order block. So we'll just see if that actually plays out or not. Again, like I keep saying, the driver is going to be CPI, FOMC, and this pattern here is going to be negated if we rip up, even if it's just a move to manipulate and we rip up to sell down on the FOMC. Then that head and shoulders is off the table. It's no longer in play. If we drop down into the 1-hour time frame, let's take off our silver bullet macro for now. So on the 1-hour time frame, I'm going to slap up the liquidity indicator as well, because I have it set to 1-hour liquidity as far as the green and the red arrows go. So you can see a lot of liquidity down here on the 1-hour time frame. Also, here's our above buy side liquidity targets as well. So on the 1-hour time frame, we had a nice sell-off today. We rebounded a little bit. This is balanced price. You can see this really long wick here. There's no fair value gap in that giant block, so there's no reason to come back up unless we're coming up for this little order, this little fair value gap, or we're going to just continue to head higher to take buy side. On the 1-hour time frame, there's no fair value gap here. Because this is all balanced price in this long wick, and then we've come back up, so we've balanced price here. And so no reason again to come up unless we're ultimately heading much higher. Now, if we are going to sell down, we're not too far from local liquidity. Could come down, swipe it, and then even see a rebound from there. So we'll be watching to see, do we deliver to sell side first? Is it going to be a directional day where it's just straight selling? We do have a 1-hour order block down here, 233, all the way down to 231. So we we certainly could sell down there and find a rebound by taking some of the sell side liquidity. Maybe we're not ready to go to 226.62 or 226.50 and take that, but maybe we're just coming back down just like we saw over and over again here, right? Draw back down into this order block and then just rip up from there. So maybe FOMC is going to be seen as a bullish thing, but maybe CPI isn't, right? So maybe Tuesday is often a manipulation day on the quarterly cycle. So maybe we come back down, get some manipulation, draw back down in this order block, and then FOMC or even just partway through the day, we start to see it rip up. FOMC, we rip higher, and then we know the move was to, again, gather more positions, more long positions down here in this 1 hour order block. So if we drop to the 15-minute chart, you can see we did have kind of a falling wedge channel kind of look, and into the end of the day, after market, we broke out of that. So that is no longer in play. You can see on the 15-minute chart, we do have a fair value gap here. We do have a fair value gap here. So maybe a reason to come back on that time frame and trade up into it. But we'll just have to see if that continues to hold or not. We have not been drawn back into this 15-minute fair value gap yet. But we also have a large 15-minute fair value gap here that, as you can see, it was set over here, but we've come back down and tested it. But we haven't even traded down to consequent encroachment, the 235.47, right? And then we also have an order block here. So we'll see if we get trading into it. We might see a 235 hold, or we might go deeper. We might go all the way down and close it and take out this fair value gap. But with this 15-minute fair value gap, it will be magnetic, whether we come back for it later or not. We are going to see price drawn back down into it. But again, on the 15-minute chart, you can see our clear optimal trade entry right here. And we've set lower highs, and we had a lower low on Thursday. We have failed to get the lower low yet into this week. But again, lower highs, right? Highest high, intermediate high, right? Intermediate term highs, short term highs over here. They're lower highs as we continue to just kind of trade sideways. But we'll be looking to see, do we take a lower low and continue that move downwards or not. Lastly, we'll drop into the 15-minute chart, and then I'll show you the silver bullet time macro. The 15-minute chart, again, just like on the this is a 1 hour, so my fair value gaps are set to show the 1 hour fair value gaps on the lower time frames, so that I know it as a high time frame liquidity target. But on the 5-minute chart, you can see there was a kind of a pattern developing, but it goes into after hours, so I'm not going to put much weight in this developing pattern. But again, we got our 1 hour fair value gap. We might trade back up to it. We might not. We might just again gap down and then run down into sell side liquidity to the downside. We also have a 5-minute fair value gap here that we traded back up to and found a rejection or resistance in that fair value gap. So all things that we'll be watching on the different time frames. Lastly, I want to show you guys the silver bullet time macro for today. We traded two different ways. We started off in calls on the call outs. The calls ended up going into profit, but not deep into profit. I ended up closing mine at a 5% profit as I had a trailing stop. So what I did was I entered calls when we were coming down. We had a market structure shift here. We had a market structure break heading into the silver bullet. Okay, and then I entered those calls, wrote it up, and then I had a trailing stop, and I ended up taking the stop at 5% profit. Now, after I took that 5% stop, what happened was that I entered into a short position. I believe it was maybe somewhere in this fair value gap, because what I saw was price come up. I ended up taking the stop. We entered into puts, and the puts went 40%. That also was called out in the Rawstocks Discord as well. And that fair value gap here on the 1-minute chart has held. You can see it's right here. So we broke structure, and this is outside of the silver bullet, but right here we had a small time frame structure shift, okay, and a fair value gap at the same time, and that was a nice entry to write it down into profit. Ultimately, we continue to see some fair value gaps here as well, and so I think it only hit maximum 40%. but it was a nice trade regardless. And if we look just at the silver bullet again, what we'd be looking at in this specific one where we entered calls was that we, had already traded up above London's high. So we have our consolidation here, okay, leading into, the pre-market. We saw price trade up here. This line right here is a high time frame liquidity that's been mitigated. That's why it's dark gray or light gray. So we traded up to that liquidity target. Then we sold down as market opened. And if you didn't play it, which we're often waiting for the silver bullet time macro. So as we open up 9:30, okay, we trade down, we come up, we break structure. Okay, we ultimately came up a little bit, came back down, took this low. That's what we're looking for. Then after that low, what we're looking for is a fair value gap to be laid, and we broke this structure here. We saw a little micro market shift, fair value gap. Okay, we came back down to the fair value gap. You entered there, and it was a small trade. I think it went like 25% maybe total, but that would have been our entry in this fair value gap right after we had a market structure shift on a micro scale right here. So I'll just draw that out for you guys really quickly. There's our market structure shift. Here's our fair value gap where we cycled back in and you had a second entry. If you didn't grab this candle here, came back down into fair value gap, you enter that position and you target previous highs. You could target that previous high. You could have tried to target this previous high. That's what I was looking for. And then when we sold off, again, I took the stop loss at 5%. But I was looking for just a little bit more. But you could also just target this high. That's the way you play it. As you enter, you just look for price to run to the previous high. Obviously, the direction of the market today ended up being bearish, and we got that second trade that went for 40% on the way down. At that point, I think there were some people in the rooms of Discord that said, "Can we enter long?" I said, "Certainly, you can enter long. Set your stop loss back down here to 233 or maybe even below." And if you entered your calls over here, throughout the end of the day, you still got to move, from 237 all the way up to 240. So it would have been a nice trade as well if you entered that short after we ended up selling down. Again, typically what we're looking for too on a nice move is a market structure shift and then 2 breaks of structures. And that's usually signaling that we're looking for a reversal after we have those 2 market structure breaks. Okay, because that usually signals that the end is near. We don't often see more than 2 market structure breaks. And it doesn't always mean we got to have these small consolidative moves. Sometimes it can be a big move up and then a big move to get those. But ultimately, when you have a shift and then 2 breaks of structures, we're looking for a bottom to end up carving out. And how could you know if you didn't get a perfect entry there, how a bottom carved out? Well, you can use RSI as an example. You see a low here. We started to see RSI divergence. If you use RSI, you can also look at the fact that we broke there. So we came down, we came up, we had a fair value gap, we had a micro structure shift, okay, and then up here we had a bigger market structure shift. Okay, so you could have entered down here. We did cycle back around to this low, so you could have gotten an additional entry here if you didn't time it perfectly. But again, there was a nice long trade in there. Just took longer. We're really trying at Rawstocks to focus on being very proficient at the silver bullet setup. That's one of my favorite ICT teachings. Smart money concepts is being proficient in understanding and finding the trade in the silver bullet time macro. Instead of having to sit in front of the charts all day long, if you can find this 1 hour time macro where there's a really good entry, you can catch a nice ride. I mean, if you caught this fair value gap entry here from 240, we ran up to 242. That's a nice trade. Again, if you ended up outside of the silver bullet just shortly, catching this fair value gap here after we broke structure here, right? Then maybe you're catching this candle that confirmed 240, right? Ultimately, if you're just targeting the low, it's $1, less than $1 move. If you were targeting, some of the higher time frame liquidity that's down here, or just letting it roll out, as you again see, RSI start to bottom, then, maybe you caught the trade from 241, all the way down to 238, or maybe you got it perfect down to 237 and a half. But nice trade there regardless as well. Good for, anywhere between 100 and 200 bucks on a single contract if that's what you're trading. So there's your silver bullet. Really interested to see what CPI and FOMC bring to the table. It's going to be a wild week. So good luck with your trading, and I'll see you guys in the trading rooms. Don't forget to smash a like, subscribe, share with all your friends. Also, links in the description to the Rawstocks Discord, where we're currently doing 7-day free trial for premium membership, where you get all of my customized callouts. But even if you're just joining as a free member, there's lots of market education. There's stock market chart analysis for Tesla, for SPY, and again in the education section, there's all kinds of beginner level ICT and smart money concepts that we're trying to promote, trying to encourage people to really understand how to read price, how to read structure, and how to be proficient in trading the market, so that it ends up taking less work to make the money. You don't have to be a slave to just sitting in front of the screen all day, waiting. So hopefully you guys have a great trading day tomorrow, and I'll see you guys on the next one.